Hey everyone, and welcome back to the Deep Dive. Today we're tackling a request from one of our listeners who wants to really understand something.
Oh, yeah.
Yeah, they're asking about these hypothetical tariffs.
Yeah.
You know, the 20% on imports from Canada and Mexico, and then the 10% on imports from China.
Right, right. Those ones.
Exactly.
Mm.
They want to know how those could actually hit us here in the U.S., specifically how those tariffs could mess with interest rates and the stock market.
Hmm. Yeah, those are some pretty big questions. And complex. There's a lot to unpack there.
For sure. So get ready, because we're about to uncover how tariffs could affect you in ways you might not expect. We're talking everything from the price of your groceries to the value of your investments.
Yeah, it's kind of wild how these things can create a chain reaction across the entire economy. Like you might think, okay, so avocados get more expensive.
Right, exactly. But then it's like, hold on, my new phone's going to cost an extra $100 too.
Yeah, exactly. It's not just produce, it's everything. Think about it. Cars, electronics, clothes, tons of products rely on imported parts, and a lot of those parts come from Canada, Mexico, and China.
Oh man, so those tariffs on those parts, they basically add extra costs at every step along the way.
Pretty much. And suddenly, almost everything you buy has a higher price tag.
Ugh, talk about inflation. And the Fed, they've got to be watching this closely.
Oh, yeah, for sure. I mean, that's their job, right? Keeping inflation in check.
Right. So when they see prices going up like this, what are their options? What can they actually do about it?
Well, their main tool is interest rates. Like, think of it as trying to slow down the economy a bit, to cool things off. When they raise interest rates, it makes it more expensive to borrow money, and that can help keep prices from rising too quickly.
But isn't that a really delicate balance to strike? I mean, raising rates too high could hurt the economy, right?
Yeah, exactly. And then you throw on the political side of things, and it gets even more complex. I
Yeah.
mean, remember when former President Trump was putting pressure on the Fed to keep interest rates low? He really wanted a strong economy and a booming stock market.
Oh, yeah, I remember that. It was all over the news. Those tweets, the constant pressure to prioritize growth to keep the market happy.
Right. And that kind of pressure can definitely make things tricky for the Fed. They're supposed to be independent, focused on controlling inflation, but we've seen how political pressure can sometimes influence those decisions.
So what do you think? How's the Fed going to navigate this whole situation? It feels like they're walking a tightrope.
It's tough to say for sure. This kind of inflation, it's not really driven by demand.
Mhm.
It's being created by these tariffs that are pushing costs up. So the Fed might think of this as more of a temporary adjustment.
So maybe they won't rush to raise rates right away.
Maybe not. But if prices keep rising and if people start to expect higher inflation,
Well, then they'd have to act, wouldn't they?
yeah, they'd risk losing credibility if they didn't. And once you lose that, it's tough to get it back.
So interest rates, they're definitely a big question mark right now. What about the stock market? How do you think investors are going to react to this whole tariff thing?
Well, historically, trade wars tend to make the market nervous. It adds a lot of uncertainty, and investors generally don't like that.
Okay, so then who are the winners and losers? Like, which companies and industries are most likely to take a hit if these tariffs actually happen?
The most vulnerable are going to be those companies that rely heavily on those imports, especially from Canada and Mexico.
So like manufacturers.
Right, particularly those in the industrial sector, including the auto industry. A lot of their supply chains run right through North America, and a 20% tariff. That's going to hurt.
And then if those countries retaliate with their own tariffs,
Oh yeah, then it gets even worse. American companies could lose access to those markets too.
it'd be like a double whammy, higher costs and fewer places to sell their stuff.
Exactly. And then there's the consumer goods and retail sector. Those companies import a ton of stuff from China and Mexico.
Yeah, like think about Walmart and Target.
Exactly. They're going to have a tough choice to make. Either they raise prices and risk losing customers, or they keep prices the same and watch their profits shrink.
Ouch, that's a tough spot to be in.
It is. And technology companies, they're an interesting case. They're vulnerable, but it depends on where they are in the supply chain.
Okay, so like Apple.
Yeah. If they're getting components from China for those iPhones, those costs are going up, and they might have to pass that on to consumers. We could see pricier iPhones on the horizon.
Ugh, that's not going to be popular.
Probably not. But the software and internet companies, the ones that make most of their money from services, they might be a little more insulated.
Because they're not as dependent on those physical supply chains.
Exactly. So it really is a mixed bag across the tech sector. But there's one sector that I think is particularly vulnerable to retaliation.
Which one is that?
Agriculture. They're heavily reliant on exports, and if countries like China and Mexico hit back with tariffs on American agricultural products, that could be really painful.
Yeah, especially for the farmers themselves.
Right, and not just them. Think about the ripple effects. Companies that manufacture farm equipment, process, and transport those products, they could all be hit too. It's a big ecosystem.
It's wild how everything's connected. It's
Yeah.
not just about economics. It's about people's lives and livelihoods, all those jobs that rely on trade and global markets.
Absolutely. And that's why it's so important to really understand the potential consequences of these kinds of policy decisions. It's not just numbers on a spreadsheet, it's real people and businesses that could be impacted.
Okay, so big picture, lots of uncertainty, lots of potential for economic pain. And when it comes to the stock market,
Buckle up. It could be a bumpy ride. It really does feel like everything's hanging in the balance, doesn't it?
it does. So with all this uncertainty, is there anything that could kind of pull us back from the edge, so to speak? Like what would make things better?
Well, I mean, there's always the chance that some of these tariffs get lifted. Or maybe a new trade deal comes out of all this. I mean, that would definitely be a positive development, right?
Yeah, I guess cooler heads could prevail.
Exactly. And if that were to happen, we could see a really quick turnaround, especially in those sectors that were hit the hardest at the beginning. But, you know, until there's some kind of resolution, I think caution is probably the best approach.
It's like we're all just kind of holding our breath and waiting to see what happens.
Yeah, it kind of feels like that. And, even if things do work out in the U.S.'s favor, there's still a chance that the global economy could suffer. There's
Yeah.
always collateral damage in these kinds of situations.
Right. Okay, so let's dig a little deeper into one specific industry that we mentioned earlier, agriculture. We talked about how farmers could be hit hard by retaliation, but I want to get a clearer picture of what that might actually look like. What are some of the specific challenges they could face?
So imagine you're a soybean farmer and your biggest customer is China, and then boom, these tariffs hit. Suddenly, those soybeans you're selling, they're way more expensive than soybeans from other countries.
So you're basically priced out of the market.
Exactly. And those buyers, they're going to go somewhere else.
And that means there are more soybeans here in the U.S. than people want to buy.
Right. So now you've got a surplus of soybeans, and that drives prices down even further.
Oh man, so it's like a double whammy for the farmers.
Yeah.
They're selling less and getting paid less for what they do sell.
It is, yeah. And it's not just soybeans we're talking about here. You could see similar impacts on other agricultural products like corn, pork, even dairy.
These are all really important exports for the U.S.
They are. And these tariffs have the potential to really mess things up.
And I imagine that kind of uncertainty makes it almost impossible for farmers to plan for the future. I mean, do they plant less? Do they try to find new markets? Do they invest in new equipment?
It's tough, right? These are big decisions with long-term consequences, and it's hard to make those decisions when you don't know what's coming next.
Yeah, and the effects go way beyond the farmers themselves. I mean, you've got equipment manufacturers, processing plants, transportation companies, all these businesses that are connected to agriculture.
Right. It's a whole system, and if you disrupt one part of it, it can have a ripple effect throughout the entire thing.
It's a good reminder that agriculture isn't just some local or national thing. It's global. Everything's interconnected.
Exactly. And what happens in one part of the world can create opportunities for producers in other parts of the world. Like if those Chinese buyers aren't buying American soybeans anymore, they're going to buy them from somewhere else, right?
So it's not as simple as just saying, let's protect American farmers.
It's way more complicated than that. And I think that's why it's so important to really think about the potential impact of these tariffs. It's not just about winning or losing. It's about understanding the complexities of the global trade system and making sure we're not doing more harm than good.
Okay, so we've talked a lot about the potential downsides of these tariffs, but let's zoom out a bit and focus on the overall U.S. economy. What are some of the other economic risks that we should be thinking about?
Well, one of the biggest risks is inflation. We've already talked about how tariffs can push up prices on imported goods, and that leads to higher prices for consumers.
Right.
But if inflation gets out of control, it can have this domino effect throughout the whole economy.
Okay, help me understand that. What does it look like when inflation spirals out of control?
So as prices keep going up, people are going to start demanding higher wages, right? They need more money just to keep up with the rising cost of living.
Makes sense.
And when wages go up, businesses have to raise their prices even more to cover those increased costs.
Oh, I see. So it becomes this vicious cycle.
Exactly. It's called a wage price spiral. And once that spiral gets going, it's really hard to stop.
And that can lead to a lot of problems, I imagine.
It can. Businesses have trouble planning for the future, consumers lose purchasing power because their money isn't going as far, and the overall economy just suffers.
So in this kind of environment, the Fed's role in controlling inflation becomes even more critical.
Absolutely. If they raise interest rates too quickly or too aggressively, they could end up hurting economic growth. But if they don't raise rates enough, they risk losing control of inflation altogether. It's a real balancing act.
It really does feel like we're caught in this web of interconnected risks. Tariffs, inflation, rising interest rates, it's a lot to process. What advice would you give to someone who's feeling overwhelmed by all this economic uncertainty?
Well, it's understandable to feel overwhelmed. These are complex issues with potentially far-reaching consequences. But I think the most important thing is to stay informed. Pay attention to what's happening in the economy, both here in the US and globally. Don't just rely on one source of information either. Seek out diverse perspectives, question your assumptions, and don't be afraid to ask questions.
I love that. It's about being proactive and taking control of your own understanding.
Exactly. And in this age of information overload, it's more important than ever to be able to discern fact from fiction. Be critical of what you read and hear, and learn to identify potential biases in the information you're consuming.
That's good advice for just about everything these days. So stay informed, be critical. Any other practical steps we can take to prepare for potential economic turbulence?
Having a solid financial plan is always a good idea. Make a budget, build an emergency fund, just in case, and think about investing for the long term. Basically, create a strong financial foundation that can weather any economic storms that might come your way.
Yeah, it's like building a bunker, but for your finances.
Exactly. And that plan should be a living document, something you can adapt and adjust as needed, especially when you're facing big changes in the economic landscape.
So stay informed, have a plan, and be flexible. Seems like solid advice for just about any kind of uncertainty, not just trade wars.
I agree. And it's helpful to remember that we've been through economic tough times before. I mean, we've faced challenges in the past, and we've always come out stronger on the other side.
Yeah, that's a good point. It's easy to get caught up in the doom and gloom, but we've got this. It's like we're all in this together, figuring it out as we go.
Yeah, that's a good way to think about it. And that's why I think it's so important to have these conversations, to talk about these issues and try to understand them better.
Right, because the more informed we are, the better decisions we can make.
Exactly. We may not have all the answers, but at least we can learn from the past and try to avoid making the same mistakes.
Okay, so let's bring it back to the listener who requested this deep dive. They specifically wanted to know about the impact of these proposed tariffs on interest rates and the stock market here in the U.S. What are the key takeaways they should keep in mind?
Well, I think the biggest takeaway is that there's just a lot of uncertainty right now. And uncertainty tends to make markets nervous.
So we're probably going to see a lot of volatility in the stock market.
Yeah, I think that's a safe bet. And some sectors are likely to be hit harder than others. Like we talked about earlier, industrials, consumer goods, tech, hardware, and agriculture, those are all pretty vulnerable.
So if you're an investor, it might be a good time to check in with your financial advisor, right?
Definitely. Make sure you're comfortable with the level of risk in your portfolio. And when it comes to interest rates, it's a bit of a toss-up.
How so?
Well, on the one hand, you've got inflation pushing rates upward, but on the other hand, you've got this potential political pressure to keep rates low.
Yeah, it's like those two forces are battling it out, and it's hard to say which one's going to win.
Exactly. The Fed might decide to raise rates a little bit, or they might try to hold them steady for a while longer. It all depends on how they weigh those competing priorities.
This is basically a wait-and-see situation.
Pretty much. But even if the Fed tries to keep rates low, the market itself might react to all this uncertainty. We could see interest rates on things like mortgages and corporate bonds start to creep up just because investors are worried about inflation.
Okay, so it's a good time to pay attention to what's happening with interest rates, especially if you're thinking about borrowing money or making any big financial decisions.
Definitely. Knowledge is power, right?
Absolutely. So stay informed, be prepared, and remember that we've been through tough times before. We'll get through this too.
I agree. And if you ever need help navigating those economic waters, you know where to find us, right here on The Leap Dive.
That's right. Thanks for joining us on this deep dive. See you next time.